Testing sound. You guys hearing me all right? Still going to be just a few minutes. I have a couple things to set up and we will get going. So sounds like everything's okay. That's good. So I'll be back here in just a couple minutes, folks. Hey everyone, let me know that you're hearing, seeing all that kind of stuff. Um, Kind of get a bigger view of the office right now. New fun camera. It follows me around. Anyway, so it gives me a little more freedom to move around and do some things that are going to be helpful. So interesting show today. Sorry for the late start. Had a couple issues that I have to do. So I'm going to go through all of the primary markets and talk about what's going on in general. And then we're going to take just a minute break because we need to set up. We're going to be sharing a Zoom meeting with an associate, and we're going to introduce you to one of our, what I'm going to call elite groups of that are flowing around the WaveTech environment, and introduce you to basically a new associate of mine that we're doing a lot of work together. There's some really interesting things going on in the background while the trolls are talking about it didn't hold S1 and R2. There's some real work going on, real money being managed, and a lot of really good fun things. So today I'm going to do the markets, like I said. Second part of the show will be talking about some of these other items here. So yeah, so just a couple more minutes of introduction. So sound is all good, right? Um, um, yeah, so that is something I do want to look at. If you guys know if Coinbase has started trading, want to kind of keep an eye on that. I think that's a pretty exciting event to say the least. So, and it is Runa time. The Runa people actually have reached out to us, so that's kind of interesting. So I've got a couple of things, and I'm not, you know, I believe in a lot of everything I do on this channel. Rune is one of them. We were on a Wave Tech meeting just the other day, and somebody just got a case of this, and it's amazing stuff. It's you don't get the jitters, and this is 2 espressos. I said 3, so that was false advertising. 2 espressos, 150 megs of caffeine. So I think today's going to be a 2 Rona. This is the second one kind of day. So anyway, yeah. So you kind of get a feel for the office. So let's go ahead and let's talk about a couple things. One of the things that we're going to talk about is the infrastructure. And this is, I told you that there was going to be a theme going on for a while about this infrastructure deal that's coming on. And it's kind of interesting because the current administration, is not a criticism, it's just what's going on, is redefining the word. So I don't know how many of you have ever heard of human infrastructure before, but that's now a thing. And so these folks are pretty good at making up words and making up new definitions for words. So that's one of the things they do really well. We'll see what happens here with these programs, but we're going to assume that some portion of these programs are going to happen. And I've got like a number of projects working around this. I think this is something when they start throwing trillions out, those of you who've been around for a while, like me, know that I remember when the word billions was a big deal, never really heard the word trillion. And now that's the only word we hear. And I think I saw something the other day that the expenditures that are being out that are going on right now is like 3 Iraq wars in 3 months, something like that. So these are big dollars, and the reality is most of this money hasn't even started to flow yet. So we're going to continue to see this thing unfold, and that's why there's an opportunity here. And today on the second half of this show, we're going to go through the semiconductor group as well as some of the equipment folks, and we're actually going to show some strategies that were built from these ideas. And because we want you to, I'm going to go through all of the analysis, so it's going to be a lot of individual stocks, but they're going to be my choice today. And hopefully, if I have any energy left, have enough Runa left, we'll get into some of your things that you folks want us to look at as well. But I think it's going to be pretty focused on our agenda today. We'll see how it goes. This will be the very last thing I do. So yeah, it's somewhat interesting. Yeah, it's interesting to watch what's going on, but I've got 3 major projects going that I'm working on right now that is going to bring, I think, a lot of value to all of us, and looking and trying to figure out what assets that we want to participate in. And I've talked about this before, and we're going to dig into the analysis here in a minute, just letting the room fill up while I'm talking about some of these things. And I guess the best way that I can put this is that we're going to be evolving in multiple sectors, multiple different themes are going to come out of all of this money being spent. And my joke is, if you just bump up against $1 trillion, you make $5 million. So, you know, the numbers are so big that there's just a lot to go out with. So let's start taking a look at some of these screens, get into the markets, and let me just get something set up here, and then we'll be ready to go. And by the way, just let me know on the chat line. As far as I know, I've tested everything before the show. Looks like the sound is good and all that kind of stuff. And so let's go ahead and start to dig in here. So we'll start off by looking at the S&P. Bring up the E-minis. They're up 2 handles right now, 41.34. They did print up to 41.44. And just a quick comment. I think I need to look at this video underneath in our channel. In my channel, you can go to understanding my process, and there's some things on the market grid. I need to watch that. I think it needs to be updated. When you see the market grid, it's on everything I do. It's really, I think I want to address this just a little bit. I see comments around the channel and stuff, and these are not maybe trolls, but also maybe just don't understand what's going on, and maybe if there's a few that don't understand, it's worth just taking a minute to talk about. But the market grid itself is really just a probability for where the bars are going to overlap. And one of the things that I have developed over the years, and we see it, that most every day the next day's bar overlaps the previous day's bar, and then there's directional movement. So this is part of what we're going to bring into the presentation on the second half, because there's been some metrics built around understanding this at next level, and I'll go through that at that time. But the grid is really useful in helping to position trades and to day trade to a large level. And you know, I do try to figure out S1, R2, you know, S2, R1, whatever, and those are just points of reference. And if they get taken out, then you go to the next number in the grid. It just tells you there's more strength or more weakness. But if you can see on any of these charts that only about I think the actual number is about 12% of the time on the bars it breaks above or below the grid on a daily basis. So that's exactly what this is used for, to define extremes and to come up with points that maybe match with technical patterns and other things intraday that you're looking at if you're trading these things. So if you're seeing sharp acceleration down and it's coming down to an S1, it's probably going to S2 if it takes it out. So that's what they're for. Anyway, enough about that. So as we go to, I'm going to go to the SPX, and I guess and I'll cover as quickly as I can so we can get into these patterns that I want to talk about. But the SPX is continuing to move up. We printed 41.51. That's actually another all-time new high. And we're seeing something interesting again, is that the PPM2, we're not getting the acceleration that I expect to see. Like in PPM2 is through its first derivative, but it's also into that trend maintenance mode. And we're seeing PPM1 still accelerating a little bit here on SPX. And what that tells us is that the 10-period moving average 40.86 going up roughly 19 handles per day. That's going to be right at 4,100 tomorrow, and that number is going to be the support. So that's just going to continue, and I've been talking about this for a while. We actually got a buy signal quite a ways back on this, and I usually don't go with the buy signals. As you folks know, I don't put out buy and sell recommendations on the channel, because that's not what this is for. This is really, the channel is for helping you to understand and have a context where the markets are, and more specifically in context with using our software, because this is always what I've done. I've actually run this channel for maybe 6, 7 years, but I used to do just a weekly only video, and it was just for our software customers. So that's exactly what's going on as far as that stuff goes. And so let's go to a weekly chart and just start to break down where these markets are. You know, I talked about we did get basically a weekly. It's interesting because the market just flipped all of a sudden. I just noticed this. Hang on one second. Yeah, look at this. I don't know. Was this Coinbase coming out? What? Something just came out. I'm not sure what. If you guys know if there was a trigger out there, but I just noticed everything was stable. Now we're down 8 handles here on the S&P. So anyway, so back to analysis. But the patterns that are setting up here is very bullish on the intermediate term, on the long term. I go through our database every night. That's an important thing to understand when you're looking at trends and what's likely to happen from this. So I'm going to take this, and this is the PPMs are starting to flatten out a little bit, but they're very robust levels. So for instance, on a weekly basis, SPX, we're at 0.63, 0.72, and 0.66. So these are very robust trend numbers, and I've talked a lot about this in the past, is that these angles of attack or the angle of the moving average is going to continue. And all of these averages are in this upward slope, roughly in this level. And these things don't change very much when they get into these slopes. What would have to happen, this is a weekly chart, probably have 4 to 6 weeks of a consolidation, then you would start to see the PPMs down below start to show some loss of momentum. And these indicators actually track the moving average, not the daily closes. So what it's doing is, and they're percentages, so they're looking at the percent change, and there's a probability map around there. And that's something I've had a lot of comments, and we've received emails on, that it would be nice to have what the probability maps are. And I talk about a lot of stuff on that, but this is going to be interesting. And I am in the process right now of I don't know how many of you use TradingView, but I'm looking into actually making a public offering of the PPM. So let me know how you guys would feel about that. I'm sure that will be are good. So let's okay. So let's go to a monthly chart and get this bigger view. I know that just to address some of the rhetoric around the channel and stuff, I have said that the market's going to go to 4,200. I believe it hit 41.51. We're 50 handles from there. That's like one good day. But we are reaching from this standpoint for the month already. We're halfway through the month, and we're already printing up at the R3 level. R3 was 41.52 for the month. Right now we're 41.51.69. So we basically have hit an R3. An RXT number would be a 4207. That would put us at the 4200 handle. But the PPMs on the monthly, and I've talked about this a lot, are just in a huge uptrend. This thing is going to last for a while. These angle of attack on these moving averages are substantial and suggest that there is a multi-quarter trend going on. So we will continue to go on with that. I'm going to bring up a study here just so you can see this. Bear with me one second. We are starting to get into, on a monthly basis, this frothy level. There's a projection right now for, let me just open this up on this down below here. 4176 is the high end of this projection, but when we go to the weekly, this is where the big expectations are being built here. We're looking at the minimum target right now off of the intermediate is 4605, and then 5139, 5400. We're not going to get, those are down the road, but this 4600 number could be in the realm of the next 3 months, 8 to 12 weeks, could be a little bit more, but these angle of attacks are telling us on the monthly, on the weekly, that there is a substantial amount of upside. And if you watch the daily videos, you'll see that the intermediate database is still 75% long. It's been very stable in spite of the short-term database backing up from around 70% all the way down to 16 and back to 40 roughly. It did not affect the intermediate trends at all. So that is something good to understand from that standpoint. So let's go on and we'll hit the NASDAQ. And let me just go, I want to start with the NASDAQ daily before we look at this. I'm leaving some of these objectives here. We do have 14,116 as a high target, 14,373. We did get the RXT sell signal yesterday, and now we are down 1.75 on the session right now. Or we're down 175 at 1.21, and so we're actually all of a sudden printing the extreme for the day. Let me bring that up so you can see it. STX 13,804, the low right now 13,805. So we're trading at the STX number right at the moment. So folks, did you hear what hit the markets here? Anyone have a clue? Trying to do this live stream, don't have. Okay. Okay, so let's go from the daily to the weekly. Let's see how we're set up within the weekly. And weekly, we're about in mid portion of this. S1 is 13,694. So far, the low's 13,732. So maybe we're going to see an S1 and see what happens. I will go. The next thing I want to go through is I'm going to touch on the Russell and the spread, just because I said last night that the NASDAQ was going to continue to lead. Of course, that spread flipped today, but that's okay. It's been pretty damaged from a trending standpoint, and I'll go through that so we have that. Yeah, so it was Coinbase, huh? Okay, that's what I figured. You guys know the symbol on that? If you get the symbol, let me know. Yeah, so as we look at the weekly, it's interesting. We're seeing the PPM1 roll over on the weekly NASDAQ. So that's somewhat concerning, but that 10-week moving average, as I've been talking about for the last 3 weeks, is going to be the primary demand line, 13,262 right now. So I don't see us getting, okay, thanks for that, guys. Coin, okay. We'll take a look at that. We'll let it trade for a little bit. So, let me know what the yeah, we'll try to get through all these details. So if you have the last quote on coin, just to throw it up there. I don't want to disrupt the screens for this, but anyway, the patterns that are setting up here, there's still upward objectives, like I said, up at this 13,000. Upward objectives on the weekly here is much higher. We're looking at 15,000, 16,000, crazy numbers on these indexes. So, and then there's these longer term ones, they've been negated or at least invalidated for the moment up at also at the 16,000 range. So somewhere between the new updates of 15,156, 16,260 is the targets right now. And actually, it's going to be, this is also, this is a weekly chart. So we're looking at, you know, a quarter or two for this stuff to get hit. Maybe it gets 365. Thanks. Appreciate it. So I think that's what they were expecting, around 360. $95 billion. There's some happy people hanging around, employees there, huh? So let's go to the monthly here, and then we'll go to the Russell, and then I want to get into some of the. I definitely want to touch on some of the things going on in the world. Bitcoin's trying to break out, those kind of things. But this is an interesting chart. When we look at the monthly chart, we got a monthly reversal in March. We're getting follow through here. Basically, it opened. It has not really had any negative action on a monthly basis here at all. And we look at the PPMs, they're off the map from a strong standpoint, a plus 3.07, plus 2.8, and a plus 2.08. So these things are just screaming here. And that same trajectory I've been talking about. These moving averages don't budge. When you get a monthly moving average up like this, these are real numbers. I realize that value of that 10-month moving average right now is substantially below where it is. It's 12,321 right now. So we're also looking at it going up at about 100 and roughly 120, 130 points per month. So this is just going to continue to be that big underlying trend line. If we did print down there, that would be the buy of probably of the year. If we printed down, we almost got there in the month of March. We got down 11,954 was that number. The low was 12,197. So we got about 300 points close to it, but that was where the reversal occurred. And I know there were some numbers on the weekly, and I was talking about what's happening here for the last several weeks is that the NASDAQ would move to all-time new highs. So there's, as you can see, there's still a lot of forward-looking expectations in these markets, and this maps out perfectly to the WaveTech database, all of those things. So let's go and look at Russell real quick. So Russell's still positive, but it's hovering right below its 10-week moving average right now, just going to weekly. And this is something to talk about. Even though we're up today, this thing's been locked sideways while everything else is printing into ATH or all-time new high. We're seeing this stuff just can't, Russell just stay in a sideways range, and it becomes even more evident when we come down to a daily pattern. You can see this thing is flatline, and it's not, other than this blip that we had in early March, it's come back in and just been in a flat line for a while. So that's exactly what I was talking about. I think I mentioned briefly in the very short video I did last night that this thing is flatline. Now, because it's so narrow, we're actually looking at close on Russell today, on the Russell cash, 2251 or higher is going to be an RTX sell signal. So this stuff will start to come back in here a little bit. So be aware of that. we look at the weekly, you'll see this pattern even more. Like I said, I just showed you that we're trading under the 10, and we're sandwiched. I call this the where we get sandwiched between the 21 and the 40. So the 21 period moving average right now on a simple average on a weekly is 21.36 and is the major demand line that's in this. So we're likely to hover around this 10 period moving average. It doesn't have a lot of upward momentum. The PPM's at 0.10, which means it's basically neutral. But PPM2 is at a 1.06, which tells you that the probabilities of declining below 2136 is around 10%. So there's not a lot. The downside is limited to this 21 in this particular pattern. But we are seeing a lot of momentum come out of this market, and it was the leader. It was up over, I think, 19% at one stage, and so it's pulled back quite a bit. I think it's up maybe 11 or 12, not having the numbers right in front of me. So, okay, let's go over and do something here, and let's take a look. And this, you'll see the trade turning up right now. This is the Russell versus the NASDAQ trade I've talked about going back last year. It was an awesome trade. When we got up into these higher levels, actually a little early, I was warning you that this trade was going to flip. There's a lot of work to do to get this from a spread viewpoint. I've talked to you folks before. I've done a lot of spread trading over my career and consider myself to be a pretty adept player in this space. And this type of pattern has got a lot to do to consolidate here and to consolidate all these gains in here. So we just looked at the Russell chart. We saw it sideways. Generally speaking, the NASDAQ, even though it's pulling back at the moment, was able to print up to new highs. And there's much higher projections on the NASDAQ and the S&P than there is on the Russell at the moment. I want to go back to the Russell just for a second. And yeah, we've literally hit all the Fibonacci projections. The projection was for it to move right into, let me just bring this up on screen so you can see it. And then we'll move on to interest rates and the dollar and all that stuff. Yeah, Kevin Chu, I don't have an argument against about what you said. I think it's interesting that maybe I'll address that when we get into our talking about this infrastructure deal. Anyway, like I said, the Russell has the high targets here. We've actually met these 2313. Let me just get to we traded just above that number, and 2463 is the extreme. So we've satisfied most of the Fibonacci projections on the Russell. So I just see this thing's lagging for a while right now, and therefore that spread is going to not be a good place to be. Yeah, so I just come back on screen for a minute here. I want to talk about the interest rates and some of the impact on what's going on here. This is a weekly chart that's up here right now, and this weekly chart is also in what I call a dragon head, which suggests that it typically will resume the previous trend. And let me draw this in just so you can see this, because these are concepts that I talk a lot about, and if you're going to participate in this channel, it's good to understand these things. But this this little formation right here, I'll just draw in some of the lines. This is what I call a dragon head. And typically when this thing completes itself, it will move back up. And I've talked a lot about this on these interest rates, is that the 200-day moving average is 1.97, basically 2%. That's going to be the big number if we print there that everybody's going to be watching. But there's actually a bigger number on my screen. I've got on my grid is the 232 level. I think we could print up to that level very easily, and that would start to at least possibly throw the markets into a sideways or maybe a mini correction if we went there too fast. If we gradually climb up on these interest rates, this is not going to be an issue at all. It's going to be part of the reopen trade and all that stuff that's going on. And I know it's interesting to try to figure out what's going on in this world right now. And just a quick comment, you see like these mixed numbers coming out. Like if you live in Michigan, or maybe who knows, maybe Canada, whatever. I know there's some folks that are from Canada on here. It looks like, there's this another surge coming and all this. Meanwhile, Texas takes off the mask, everything going. Nobody's dying in Texas. I saw an interesting article. Why isn't anybody dying in Texas? And, so I don't know what's real anymore. And it's very difficult. I've talked about this before, that it's very difficult to determine what's real and what's not real anymore. And it's by design, just so you know. It's not, this is the way it was designed to work, is keep all of us little people just very confused on what's going on. But this reopen trade is going to continue. There's a lot of positive things going. I think the infrastructure bill is going to get spent. I think the shift is going to go away from COVID to climate change, is what I'm feeling right now, is that's going to happen. So maybe the clean energy, some of these other things, once they get blown out, will do really good. Now, Jay's on the line. He built a clean energy portfolio in our platform some time ago, and it's been done really well, but it's actually going flat, and we're selling out a lot of those stocks in spite of all the so-called, we'll do an air quote, clean energy agenda that's out there. So there's definitely, these things were anticipated, they're overplayed, and now we're in a correctional phase in that. But these interest rates, back to interest rates, these things are going much higher. And this is the weekly graph. And I've shown you this graph before, is when we go to monthly, where now all of a sudden we're seeing multiple numbers and a cluster of numbers around that 230 number I just mentioned. I mentioned 223, 229 is also one of the upper end ranges, and then as high as 268. And if you remember back in the days of the old taper tantrum days back in 2018, those numbers were at 326, 327 on yields in. So there's ultimately, I think you're just going to see this chart continue to trend higher. All the PPMs you can see here have turned up. PPM 1 is up big. PPM 2 is in the process of bottoming here and starting to signal that this long-term trend is going to be real. Right now, there's still some vulnerability to interest rates to come back in at some point, but once this 21 turns positive and we get into plus 0.25 or greater, the probabilities are going to go almost to zero that these numbers I'm talking about, somewhere between 220, 225, or 250 on the 10-year is going to be, it's going to be a thing. I want to bring you over to the yield curve for just a second. And This is the primary yield curve that the Fed is manipulating. This is what they wanted. I remember telling you folks, last year after and early on when the Fed came in and announced they were going to buy all bonds, they were going to buy anything they needed to buy to support the market. When that happened, that was the point where I was telling you they want the yield curve to steepen. And for many years, for about 8 years, I was a consultant to a lot of the major banks and the proprietary trading room. And these spreads is what banks do. Banks don't own anything outright. Banks do not take any risk if they're going to avoid it. Their maturity of their portfolio is somewhere usually between 2 and 5 years. They very seldom get beyond 7.5 maturity on their overall bond portfolio. And so they don't take a lot of risk and they spread everything. And so when this thing is steepening here, what this is telling them is they want to lengthen their duration a little bit. So this is the way they do it through these spreads. And so these are really important to understand. They have a lot to do with the banking system and the financials being able to make money. All of those things is what goes on at these levels here. And so that's definitely what you want to see from a reopening economy. You want to see this steepener. I think it's going to steepen a bit more. Probably this is the 530 spread. Personally, I'd like to see this at about 2.25 spread. It's right now 150, 146. So you need a lot steeper to actually get the financial system a bit healthier. And I think that's where it will end up, whether it's through inflation expectations or what it might be there. That is the thing that that's the thing that I would be focused on as we go forward. And these are things I'll be talking about. So let's go over and take a look at the Dow. Looks like the market has already stabilized a bit. Everything's starting to run back. Let's go ahead and take a look quickly at the Dow here. And last week, I went into a big discussion about what I thought was going on with the Dow and longer term aspects. This is the monthly graph I brought up, and I continue to believe that this is a major bottoming pattern in the Dow. In spite of all the so-called money being printed, this is probably, if you're going to watch anything, this is going to be a huge effect on everything as far as the outlook of just about all of the markets. And the Dow needs to remain stable, and I think they will defend it at all. If it did start to fail, there would be a lot of things going on to defend this, whether it's the yields that I just talked about. I think ultimately the yields are going to cause these markets to continue to move much higher, and meaning that the Dow will appreciate. I don't expect anything crazy here, but it just needs to stay stable. And I talked about this. I'll just mention it again right now, as I talked about that the stable Dow with all the new Dows out there will cause a massive amount of additional purchasing power. And if you haven't read or at least watched the video on Princes of the Yen, watch that video to understand what happened in Japan between around 1982 through 89, which was the top end of the bubble that burst. And I really don't follow the Nikkei Dow much, but I just happened to see a print or a story or something that said Nikkei Dow at 29,000, and it like took my breath because I realized that the Nikkei hasn't been at 29,000 forever, and I think it was around 37,000 was the all-time high, and it seemed like something that you would never be able to surpass all of a sudden it's looking amazing. And I won't go into a lot about the Japanese situation, but it's definitely they pumped they pumped everything up there. The Bank of Japan, the BOJ actually owns something like 70% of every ETF. They bought the stock market. They bought everything. Thank you, Richard. Appreciate it. So yeah, so I think that covers the Dow. Let's touch on gold. And since I put out the gold to break out, let's break down the gold chart here just for a second. Even though I cover this every night, it's coming back into these moving averages. We're still setting up this formation. So if you're one of my favorite trolls out there, don't get too nervous yet. This is a big pattern that's setting up. This is similar to what the NASDAQ did before it rallied to new highs. And so I still expect to ultimately see this thing go back and touch the 200-day moving average. That's definitely going to be part of the thing I expect to see happening. And the PPMs are setting up, everything's setting up perfect in Bob Kendall's world. This is the way it looks when when a market is bottoming. And so we'll continue to keep this on watch here. The weekly chart is, this thing has been working this pattern for about 8-10 weeks. It's pretty typical. PPMs are starting to turn up. They're also looking really positive. PPM 1 and 2 are in position to make some really, I think, big moves. And we'll start to move back into these moving averages above the markets right now. I'll bring some of this stuff over on screen so you can see it. And I'll go full screen just so we can see what's going on here. And sorry, wrong screen. So yeah, as we look at this thing at full screen, what you're going to see here is that the pattern is setting up. The 10-period moving average still has some downward pressure. I've been talking about this. This is going to continue to be some pretty good resistance. 1744. The high was 1750. We need to get a close above this on a weekly basis. We got a really good shot this week. It's Wednesday. We got a couple days. We're talking about 14, not even 14, $10 run on gold to get that on a weekly basis. Once that starts to happen, the PPMs are telling us it's already going to happen. There's just still enough downward pressure right now to be resistance. But my guess is when we come in next week, when these charts update on a weekly basis, we're going to see this PPM 1 cross to its first and second derivative, and the possibility of seeing PPM 2 start to turn up through its first and second derivative as well. When that happens on a weekly basis, then we're set for this thing to start to move into the Fibonacci grid that I have up here. You're looking at 1776 is 0.236. And if we get above that, we're going to run to 0.382. That's 1838. And I've been talking about this for a while, that I believe the gold will run up to that level. So I just want to go on a couple more things, then we're going to get set up for the second session of the show that I talked to you about. I'll come back on screen as soon as I finish a couple things here. So let's go ahead and just bring Bitcoin up. I got to bring this up. This is a weekly. This is a dragon head, and I've been talking about this dragon head for the last 10 weeks when it started to set up. We originally got an STX weekly sell right here. We should have went sideways for 2 weeks. We did. We continued to follow this 10-week moving average. I was hoping, I remember a month ago when this bar was up there, that we would print down to this 10-week moving average, and we didn't quite get there. We fell short of it, but we did trade down into, at that time, the low. Let me expand this just a little bit so we can see a little more of this. But the low was 50,418, and that 10 pair moving average was 40,000. But what was interesting about that is we traded just below S3, almost down to STX, which would have been a hit on that. But as we come into this week now, we've already printed out most of the upside. The high 64,858. Here we are, R3 64,937. So we traded into that. We backed off a little bit here. And if you look at the grid here, the low end of the grid, 59,415. I've noticed that these grid numbers we usually fall a little bit short of S1, R2, or we trade in between these numbers. But they're really good guidelines for as far as what to expect for the week. So far, basically in the range of an S1 and an R3. So this thing's played out. I still think we're going to be constrained by these upward grid numbers here on this level. We go over to a daily just for a second. We'll go down a bit here in time. You'll see that yesterday, last night, so these charts close at midnight every day. And it's funny, Steve Weiser, I was just looking at lumber, almost brought it up. So maybe you triggered me. Yeah, and we'll take, yeah, Jake, I'm going to look at coin here in a minute. I'm just trying to get through a section here. So but we did get an RXD sell last night. Now we're coming back into the bottom end of the grid. STX 61,550, low 61,586. So we basically have printed the STX on this thing. But this stuff actually updates at midnight Eastern time every day on this particular chart. So let's all right, so let's bring in a time frame. We got to look at this. So here is the 5-minute chart of coin, and let's try to take it down another notch here. I will make sure that we get this symbol into WaveTech tonight. So Jay, you might want to make a note of that when you hear this. So so here's a 1-minute graph. So it came out, bought it up. Now it looks like we'll have to watch and see where the magical buy point is. And the reason I want to get it into WaveTech, we developed a very unique process, which the second day that a symbol is trading, we can actually start to model a brand new IPO. So I'll make sure that gets in there. Maybe I'll mention it on the nightly video as we go through that. Yeah, there you go. We can do a 30-second. Here's a 30-second chart. Yeah, so you had the first run. So we could even put a model on this thing. No, we don't have enough data yet, not even on this. So, but anyway, yeah. So interesting that they're fading it a little bit, up 41, and this was a direct listing, which makes it even more interesting. So it looks like all the employees are selling out, taking some money, some of it anyway, right? Yeah. So, all right. So here's what we're going to do. Let me come on screen here. So this is the plan. I'm going to get set up with an associate here, get them online, and get this Zoom meeting set up. And then we're going to go through a PowerPoint, talk about some things, and then we're also going to bring up the portfolio expert. We're going to build some actual portfolios, show you what to look at, but I'm also going to go through a lot of details. So we'll see how it goes. I ran over a little bit where I wanted to get started on this, but it'll take just a couple minutes. So if you folks will hang on, I'm actually going to put the starting screen up. So hopefully I'll be able to get all this set up. It shouldn't take but maybe 3 to 5 minutes, and it's a good time for Aruna, right? So, all right. So I'll be back here in just a minute, folks. So just hang with me. I hear you. Okay. You should hear me now. I'll do that again. Thank you. Thanks for your patience. Okay. Um, and so the only thing that I'm hoping we don't get an echo when I bring in the desktop, but I'll figure this out. Okay. So yeah, you should be fine. But basically, what we're going to do is I'm going to introduce Michael Orenson here in just a minute, and you'll be able to. He's part of an elite group. Matter of fact, he was a founding member of this, and we spent the weekend together just recently, last weekend here in Arizona. Had crazy meetings for like 4 days almost. So I want to introduce some of the strategies, some things that have been being worked on, and things that we're fine. So we're going to go through the infrastructure and those type of things. So we'll go ahead and do that. Only last thing I have to do is, Michael, can you hear me all right?
Yes, I can.
Okay, folks, let us know if there's an echo or anything weird going on, because I have to turn on the desktop audio to do that. I can mute out if I have to, but it looks like it's working fine. So, Michael, a couple things we could do, make this easy, unless I could just bring up the PowerPoint on my side, and then you can just talk about it, and I can flip the screens when you want to go. That'd probably be the easiest thing.
I think it will be hard because it will be hard for me to show the numbers.
Okay, all right. Let me just let's see here. Let me know. You should be the host now, and I'm going and you can yeah. So I think you'll be showing your screen when it comes up. Thanks for your patience, everyone. Yeah, and start the
PowerPoint you see, and if I bring the portfolio expert, do you see the portfolio expert now?
Yeah, I do. I'm going to bring that up full screen so everyone else can see it. Yeah, so okay, folks, we're going to kick this off, and we're going to do some back and forth. We want you to see this, and if you can, Michael, it makes it full screen easier if you start the actual PowerPoint, page by page, if that's okay. Yeah. Okay. All right. All right. Go ahead. You make that a little smaller. Yeah. Yeah. Because it gets kind of small. And there you go. Perfect. Thank you. So why don't you go ahead and just talk about some of the things that we're doing here. We're going to go through the semiconductors equipment strategy that we've been working on, and we're going to show you how we broke these things down. Let's see here. So he has an echo, but not you.
The idea came in our mind because on the general bill, there's like on the whole infrastructure bill, there is $50 billion allocated to the semiconductors. And unlike many other things, this allocation is pretty direct, and there is like actually even direct explanation what is dedicated for and like where idea behind it, which is like basically build manufacturing capacities in the United States. So within the whole semiconductor sector, we actually took quite a narrow idea and basically only looked at the equipment place, the symbols which actually involved in the production of equipment, which obviously is one of the first sectors to be hit in case the bill is approved, but also even if the bill is not approved, or if the infrastructure is actually, or the semiconductors end up being taken out of the bill, it is very likely that this will happen anyway, even without the government support, just basically with private funding, which is kind of supported by the major players. There was a summit earlier this week on Monday in Washington taking place with the government participation, with all the major players involved. And the demand is pretty clear. So like the shortage in demand for the chips is pretty clear in spite of any infrastructure bill. So We feel quite strong about it. Like the stock prices, uh, that's one of the things to be noted. The stock prices are quite high for most of the players already, but there are some plays which could be still found at the reasonable levels. So basically, what we did, we just selected the whole universe of symbols and used Seeking Alpha basically to search for fundamentals and got the most appropriate because they actually have a sector semiconductor equipment companies mapped out as part of the semiconductors already. So we didn't have to do any further research to basically split the semiconductor plays, the equipment plays from other semiconductor companies. So basically just took their current match. It was 33 companies originally on the list. And you could see all those companies basically here. This is a full universe of 33 symbols. And we basically rated it using our rating system. We have three different ratings which we came up with. They're very simple rating system. One is based of Seeking Alpha fundamental data. Another one is based of the wave tag symbol related data. And the third one is based of the wave tag portfolio expert. Basically, the portfolio expert data as a result of constructing the portfolio on the universe of symbols. So that we took the 33 symbols, and on the first iteration, we were able right away basically to exclude those symbols out. It's about, I believe, 10 of them. So since it was 33, like probably 11 of them, we excluded after the first iteration. It was quite a simple task. It's easier to see it here, I believe. Um, so basically, just, yeah, there's some data that I need.
Michael, could you do me a favor and actually break down some of the ratings so that folks can understand
Yeah,
what's
I'll do it later. I'll give a general overview,
okay?
and I'll just go in a bit more detail
Okay.
rating which we're using. So basically, uh, here, like, I have to go to Excel because there is a bit more depth, which I'm going to give explaining why we excluded certain symbols. So like this is the basically positions which we decided to exclude right away. Basically, the decision on them was very simple. They actually had quite a good fundamental rating. Some of them, at least, there's like at least two of them that have a poor fundamental rating, and most of them have quite a significant value above 70% or like 60% for sure. In some cases, they do even have a wave tech rating for particular symbol pretty good, like above 50-60%. The problem with them was basically the portfolio expert results. So like those are the symbols that generated either negative result over 6-year backtest. So we did a backtest for 6 years, and they either generated negative results, which are shown here in red, or they generated very low results. So like they generated the percentage return of 5, 3, 1% on quite significant amount of money invested. And that's basically resulted in their low ERs. So like all those symbols, as you could see, mostly in the red zone, even though some have first of all, portfolio ER, not a particular symbol ER, because that relates more to the latest 5-year backtest date. So like they might have, like, for example, what that means basically that for example, this symbol IMTT, it have, for the symbol, it have quite a nice, quite a big ER of 350 almost. but for the portfolio, it have an ER of 67. So what that basically means that generally the symbol of the long term traded quite well by the system. But over the past year backtest period, it didn't do well. So like since we believe that the latest period is more important for the basically current analysis, that's why based on that, we most often would try to exclude the numbers, the symbols which generated negative results and therefore had low ER numbers. So that's basically was the results of the first iteration. And even on the first iteration, it's important to notice that the results we got were pretty good. So we back tested, as I said, on 6-year back test. And the results were that $1 million portfolio was basically turned to 5.4 million. The total return was 540%, which basically about 90% per year um, on the yearly basis. So even on the first iteration, the results were quite good. We still believe that 33 symbols is too big of a number. We wanted to cut it down to somewhere around 20 symbols. So basically, the first iteration, which I just explained, it did exactly that. So from 30 symbols, we went to 21 symbols. But in spite of the fact that we excluded all the negative symbols out, in spite of the fact that we included all the low yield symbols out. Surprisingly, we didn't get an increase in numbers. We actually got like almost the same numbers, or even a minor decrease, because one of the things we did while doing the first part of the exclusion, we actually took away some high runners with some expensive stocks, but the one with like a price of, for example, here we could see like we took some expensive stocks out. They actually had pretty good ERs in the past. Some of them actually made some good returns, like 6-8% here, even 15% here. So we did took some just generally like the stock price here is 600, over $600, and on average of with other symbols it's around $30-50, and we generally tend to try to use stocks under $100. So this is like a sixfold, even though like here we have 129, 163, 196, which we remain in. Those are just way too high. So like we excluded those out, and those were the ones that had some good results as well. And as a result, as we didn't expect that to happen, but the second iteration weren't so good. But the second iteration basically allowed us to get to the third iteration. So basically, in the second iteration, we once again saw which symbols are underperformed under new basically allocation numbers, because it was already less symbols, and what symbols generated low results. Here we weren't already like that strict, because we see like if we kind of like looking at combination, not only purely the return, but also the ER portfolio number we're looking at the percentage win, we're looking at net P&L. So as you could see here, after that last exclusion, basically is everything in the green, dark green, yellow zone, almost nothing is in red. So that basically gave us the third iteration. And the third iteration was we actually were able to improve the results significantly. We got basically we were left with 14 symbols, and we brought the return basically up, basically doubled the return. So from 500 it went to 940%, or 160% on average year return over the backtest period. If broken down by years from 15 to 21, we could see that 15 historically was quite a bad year. So we got a negative result, quite an expected one. We would prefer it to be less, but that's how it is. I mean, the iteration didn't help to minimize that. So I guess it was just a bad year for semiconductors, and the idea is that in such years it's just better to stay out of the way and not just to try bother to trade the strategy. So
Hey, Michael, I have a comment on that. Just want to add something there. Yeah, what 2014 and 15 were two of the hardest years to make money because of the rotation started at that time. If you look back in history, it started to rotate to the FANG stocks and the upper echelon of all of the indexes, not just the NASDAQ, but virtually all indexes were rotating to a very small subset of symbols. And it was very hard to get any broad participation in the markets. And those of us, I know our institutional clients back in the time, it was like the more you diversified, the more you tried to find something, the worse your results were. So that this certainly reflects just that.
Other than the 15th, as Bob just explained, which was generally a market as a whole condition, we could see that the portfolio performed quite well. It did almost like every year above 40%, in some years well above 80, 90%. It is doing pretty well this year already, plus 30%, and there was one year it was flat basically in 18. And what I like also about that portfolio, that it seems to be pretty balanced out. It only has 14 symbols basically in it. It is optimized on all the daily and weekly models, so it have a nice combination of daily 1 and 3 and weekly 1 and 3 symbols. It looks like it leans more a bit more towards weekly symbols, and like I didn't do exact calculation, but it seems to be like around probably like 30 to 70, 20 to 80 ratio in terms of more leaning towards weekly models. And within weekly, I think it's pretty equal in terms of weekly 1 and weekly 3. What I like about it as well is that you could see here that all ER for the portfolio are above 150. So like the lowest ER, like we use the ranges. So like we feel very strong. Like we prefer to trade anything above 150, but occasionally we do include some symbols below 150, but no lower than 100. But here all the symbols are above 150, and almost all of them above 350, except for 3. Yep, yep. Yeah, I am.
Cannot. So I'm going to do it this way. So the question, Michael, and I'll let you can hear me, is now I've lost it. It moved up on the line as well.
Like TB and
Yeah, the P and Ls. Yeah, on the CBE. Yeah, because that's let's cover that real quick. And then real quick, folks, I just want to make a comment that what we're going to show you, this is the breakdown of the results of a lot of research. And then in a minute here, I'm going to start going through some of these symbols just for probably time purposes. We'll probably stick to the top 14 at the moment. We'll see how we get through those and just start to look at things. And we're gonna show you some other things. So go ahead, Michael, and address that question if you would.
So basically the question, I guess it's from John C. Why did symbols like SIBE and form with low net dollar P&L make the final set of symbols? So let me open to understand that better. So for example, that's the symbol. I will put it in dark red, SIBE and form. So basically on the first iteration, we see that it has a quite low net P&L. Yes, it does. It's true for both SIBE and form. But why we like them? Because, for example, for the SIBE signal, for the SIBE, it had very low high ER portfolio, which basically means that it's like almost risk-free symbol. So like in the worst case scenario, we'll make most likely at least 6% trading it. We're not likely to probably make like 26, so it's not going to be like one of the high runners. It's not like DQ who has made 66%, but it just looks like a very risk-adverse symbol to trade. And since we use like kind of like a combination of the parameters, for us it is very important to like kind of mix together the risk-free symbols with those that generate better results. Obviously, like we would prefer the out of all, like basically the DQ looks like one of the best performers here. It yielded 66% return with 84% win rate and a coordinate ER portfolio of 568. But unfortunately, not all symbols are like that. So like we can't find all the symbols like that. And VMI also looks good in this sense with a win rate of 88%. Not such a great P&L of only 15%, but actual and total ER portfolio of 2,400, which is very extremely high, which makes it extremely safe to save the symbol, which is at the same time proven by the percentage win rate. So kind of to answer that question, it's a combination of the parameters, and at the end of the day, what is important for like it's not so obvious why the form made it to the last list, but it did made it, and even on of the second iteration, where it was more concentrated position, the form like with more concentrated position, you could see that it still makes and it's still in the like the form is probably like if you ask me what's the next candidate to be, if I had to like cut it down to 13 candidates, the form actually would be the next candidate to be kicked out because it has the lowest PNL out of all symbols left in the list, only the PNL of 3%. So if we just basically, the idea behind that is that we're not with the past results don't guarantee the future performance. So we don't know who is actually like who is going to be on the edge. Probably like form could be for some reason selected for all this infrastructure bill funding, or at least one of its plans would be funded with that money. And in the forecasted period in which we're actually going to trade that portfolio, it's going to be one of the industry leaders. And it looked comparatively wise, it looks good to be left in. It does still have but as I said, it does look like it's going to like the form would definitely be one of the next candidates to be excluded because on all major indicators of the last it's not the last run, it's of the second run of the second run, it's basically barely made it to the third run because on the second run it had a net P&L of 3%, percentage win 57, and ER portfolio of 171. So like out of the candidates who left for the third run, it was basically one of the poor performers. The SIBE, on the other hand, continued and to remain pretty strong, uh, still with low net P&L numbers, but with very strong ER and percentage win. So we want to keep that symbol in, simply like kind of like a risk-free symbol. And
Hey, Michael.
Yep.
I want to pull us a little bit out of the weeds because this is so detailed. If you, I don't, what I think we should go to is try to go in and let's start bringing up some of these portfolios and show them what the performance looks like. That's going to tell more of the story. Unless there it may be a critical point you want to cover here, go ahead, and then we'll just and then we'll move on to the actual portfolios and going through some of these some. Okay.
Basically, the first iteration, we have 14 symbols left. We're quite happy with the results of at this stage because the basically quite high numbers everywhere as I started to basically guide you through already pretty high net P&L numbers, all the symbols yielding above $100,000. Pretty nice, like with three symbols uh, running at the top with over 1 million in returns. Pretty strong P&L numbers in terms of the percentage return, with at least like uh, five symbols way above 30%, with one of them, and actually like with two symbols way above 70%, and pretty strong win rates with only two symbols below 60% in like 57, 58 range. Most of the symbols way above 70, 80% percentage win. So that we feel very safe about this portfolio. So it looks like the average per like average net PNL is 25%, average win rate is 73%, average ER portfolio is above is around 550. We use a measure to measure risk. We use a weighted portfolio ER, which is equal to 407. This is basically weighted against the total amounts of dollars invested, um, just to basically uh, kind of like give us an accurate measure of the risk, as we believe that is one of the good measures which we basically could pull out of the wave tech without doing any serious calculations, and we feel like it's very material. And basically, yeah, this is about it. Like the following slides just basically explain the logic, show the current open positions. This is actually like if you look here, this is the third iteration right here. Um, we're looking to open, like we're actually getting getting into that portfolio right now. So what we did in terms of analysis here, like this is 8 positions that portfolio experts have open right now in the last iteration of the portfolio. But since we're some of them are pretty overextended, but you could see here they already yielded big returns. And if you do the calculations on current days held and current profit against the average and standard deviations and max, in most cases they are way overextended. So we're not going to be way too aggressive. We don't believe that this strategy requires getting in right away. We actually see that the market is stabilizing a bit. Today was kind of a nice day, like the first day where actually most of the positions are in green. So what we basically did, we just opened 2 positions to just match the current holdings of the portfolio, but those 2 positions that end with entry dates on 5th April. So basically 10 days ago, profit-wise, not nothing, days-wise, well below 30% still. So we basically just opened 2 positions and waiting for those to recycle to basically catch them on the new signals.
Performance, 'cause that's yeah. So we want to maybe get in the portfolio expert and take a look at
By symbol performance. Okay.
actually no one was hearing me because the sound was off. So anyway, so yeah, anyway, the what we want to show you, and this is something I plan on doing is I know Jay's listening, and yeah, and so Don Wiz is asking, are we going to plan on using multivariant? We're going to take and put our twist. This is the work that Michael and this elite group has been doing on their stuff. Some of the things that we want to look at, some things that, as well, and going to be collaborating. And ultimately, the plan is to get a meeting that starts to focus around some of these portfolios being built, the stocks that you folks out there can actually use, even though maybe you're not using the platform. Obviously, you'll have some sort of backdrop as far as everything goes on all of that. So yeah, so just so you can see the list here, DQ. You can see all the numbers and net P&Ls. Those are the same numbers that were pretty much in there. And this portfolio is a back test 5 years, right? Can you?
6 years.
Yeah. So yeah. So what I want to do is take this this top 14 list, and I want to go through and bring it up on TradeStation, look at some of these symbols just to get an idea of where they are. And Michael, what I would like you to do is maybe interact with that analysis. So I just want to go through that top 14. And
you plan to bring it on your TradeStation, or you want me to bring it on?
No, it's fine. You can leave it like where you are, and I can show mine. You don't have to do anything. So I'll just leave you and I'll bring it up on my screen, and I'll just take the zoom off the screen.
I'm stop sharing mine. Yeah.
No, you don't. No, you don't do anything. You're fine because I want to bring you back, and I'm just I can put a different screen for YouTube on so they can see something different. So it's easy for me. So yeah. So. Yeah, so let me just go back. I'm trying to get this PowerPoint so I can see some of these 14 symbols over here that I want to show to you folks, and so we can go through this. And I'm trying to find the right screen here. Yes, hang on. All right, I've got. Is it on that full universe? The first 14 are those the ones it chose, or just the one in green? See, I'm trying to find a sheet that I can work off of.
You could work off the first sheet of the presentation. GQ, it starts, it's 14 symbols only on the first sheet.
Is that P3 iterations?
Yep.
Okay. Okay, yeah, I see them. Okay, good. So I'll bring this up on screen so you folks can see it. I'm going to go through these symbols that we were just talking about, and we'll use those as to get through and just kind of get an idea what they look like technically. And obviously, you can see the performance of these being up at the they're actually in a hierarchy of where they are. So let's take a look and let's go over, and I will bring up TradeStation. I want to look at some of these things just on an individual basis, and so we'll start to look and we'll match them up with models. So DQ is on a weekly 1-2, but for the moment I'm just going to go to weekly and go to DQ, and so we can start to look at this. And I actually right now it's DQ is actually, I've got short logic up here, is actually short at the moment. It's actually in this downward moment, and that's not one of the symbols that were chosen to be entered as well. But this thing here is, you can see all the PPMs are down. Everything is down substantially. So in a portfolio construction, it's okay to have this in there. You just wait for it to recycle and come up with some new buy signals out of the system and things like that. But these are these type of symbols. If we go over to a short-term basis for a minute, this is exactly what we're looking at here as far as the markets are starting to flatten out. Looks like the daily patterns are starting to flatten out, and this is what Michael was talking about. What you can do with WaveTech is you can start to put these in to a daily watch list, look for this recycling. So even though the weekly chart we were just looking at looks pretty dramatic on its declining, we're starting to see some bottoming patterns in some of the things I talk about all the time on a short-term basis. The good news is that the WaveTech models are going to pick up when this thing bottoms, and it's running weight on weekly 1-2, but at least you start to see when these things are starting to rotate out. So we'll go to the next symbol here on Atom. And a similar pattern, actually, this is 1-2 on here. So this is the same models that are in the WaveTech models, and this is already got a buy signal. It's kind of fading, and it's just kind of going through here. But if we look at it, is a D3, so I think I can flop that over pretty quickly here. I just have to take this other one off. 1 sec. So yeah, so D3, which is what this is mapped out to in the portfolio, does not have a buy signal right now. It's waiting for it to come back in right now. So once this pattern recycles just a little bit more, it's starting to turn up. All the patterns are turning up. This stock will be in play. This is probably one of the next ones to come in into the portfolio as far as recycling and starting a new portfolio. And a lot of the stuff that Michael was talking about here in the detail and going in, and these are real monies going into these stocks. So when you start into something, we do this a lot on training on WaveTech, is we're talking about how to enter, how to come in at different cycles. When maybe a symbol that you like is already up, how do you trade it? So these are the analysis that are being done. Is there's a lot of metrics and things here that are fairly complex, but I want to make sure in the future that we find a way to actually talk about how the metrics are developed and get some context there, so that you can understand exactly what's being done with this portfolio. And the plan is to actually put a portfolio out and have an update once a month or something, and maybe have a little mini meeting, and it may be recorded and then posted rather than live. We'll figure out how the best way to do this, but it's something that we want to have out the community. You'll have the opportunity to see some of these trades and follow along with what's going on. So let's go to the next symbol. Now this is on a weekly 1.2 is ENPH. And I saw somebody mention that Biden said he's only going to award these infrastructure funds to American companies. So that's something that also has to be looked at and see if that's true, if they're not going to allocate these funds. But even though there's another element here on all of this stuff that I want to bring into play here, because I think it's important to understand from what's really going on. It just for the fact that a company is not maybe it's a foreign company and monies are being spent there. Sometimes they're suppliers for some of the other companies that are getting money. So there's some cross there. It's not just cutting. It's like this is the only way it's going to be. There is definitely other elements that come into play where the cash flow is going to go and those type of things. So when we're looking at these symbols, we're trying to find something that's going to capture the cash flow and the best that we can, looking through all these infrastructure stocks and going through all types of things. There's what you just saw was many hours of breakdowns and going through and researching symbols and all of the things that are out there. So as we look at let me flip this chart over to a weekly, and I know it's weekly 1.2, so I want to put that up and just bring that into play. It's bear with me while I'm putting this up. So yeah, so it's I actually have the short logic on here. This thing is actually short at 182. It's 152. So we're still seeing a lot of negative rotation. This is somewhat of a dragon head. So there's a lot of work to be done before the short trade is going to let go, and then the long trade is going to come into play. It's going to take probably another 5 or 6 weeks, and that's why some of these symbols that we're talking about, they don't. If you're just starting a portfolio, these aren't. You don't just. You have to wait for the signals to come in, and many of these are flat right now of the 14. Michael, how many are flat right now from if you just put it in a portfolio? Maybe why don't you? I've got your. Why don't you bring?
Basically, there's 8 positions which are open. 6 positions are open. Like one of them was open on 13th April 2020. So I mean, they opened like a year ago. Yes, it was a year.
What we
What I said that like only opened actually 2 positions on form on onto, because the entry date is April 5th, and both of those are traded on D1, so like they're short-term plays.
Yeah, and as I went through just a second ago, looks like that one stock is on the D3 or whatever it was I just went through as the next in rotation. But yeah, but these are all the what's on the screen right now. These are the trades that are currently in the system are long, but some of them were on the live strategy were not entered because of them being long in the tooth, meaning that they've been on for a while and they need to recycle, and the elements, and that's something that we talk about all the time. Just the fact that the models tell you to buy, you don't just go in and buy them after they've been long for, since last year sometime. You want to recycle and let this thing come back into play. So let me go back to the individual symbols here. And so the next symbol that I want to look at is ACMR. We're just going to try to go through as many of these as I can. I'm going to change this logic just for a second here. 1 second. I want to get rid of the. I just want to turn off the shorts right now. That won't work. Okay, that'll get rid of the shorts, so we don't have to have those out there. So basically, this pattern here is what this is a weekly 3 that's on this. So this is also waiting for this thing to recycle. So a lot of these symbols are not in flow right now. And as I said early on in the show, when I was doing the opening comments, is a lot of this money hasn't even started flowing. In fact, it's not even been approved by Congress yet. So this stuff is probably 6 months down the line, but markets will start to look at these stocks and see which ones are going to be players. Don't know which ones, but if the money starts to flow in here, the technicals are going to show up. All of this stuff is going to start to show up, and you'll be able to see exactly what's, which symbols are starting to see cash flow, or market participants are starting to look at that. Hey, these guys are probably a player, and there'll be earnings reports and all the other stuff. And one of the elements when Michael was presenting, there's a fundamental rating that's used along with the technical rating, and looking at all the PPM ratings. There's some very detailed analysis that's being done to build these portfolios. And like I said in last night's video, these are kind of techniques when you start to really dig in. And I talk about ETF hacking. When you get in, this is beyond ETF hacking. This is building your own ETFs and doing some serious management and the thought process that you have to go through to get this level. The plan is to have some of these in these portfolios out in the community, so that they're usable and all of those type of things, because that becomes very, very useful for all of us that are hanging around. And this is what we want to do. We want those of you that have the skills and want to do this stuff to actually participate. And I think maybe what we'll do, I hadn't talked to Michael about this, but we're actually looking at users and people that might want to participate in this group. And we're going to have, I think, a questionnaire and some other things, just to make sure that we're trying to build some very elite community here, just to be able to bring in some real substantial kind of analysis and stock selection, and utilizing the process that's out there, the WaveTech process, both through Portfolio Expert as well as WaveTech. And I just put that on the screen so you can see it here. Is, you can actually embed WaveTech right within Portfolio Expert, so it's very simple to flop around and look at strategies here and change around. There's some things in WaveTech that provided that aren't in Portfolio Expert, so these two pieces actually work together to actually authenticate all the process that we're talking about here. So we go back to the stock analysis here. I want to move on to the next symbol, which will be form. That was one that was a question about, and somebody had made a comment. I saw that something about 20,000. I don't know if it was, I thought it was formed, but there's 192,000 shares done. And I want to talk about something that I think is relevant while we're talking about investing in actual stocks. And having been an ex-market maker, I want to discuss something that's important. Is daily volume is important, but the capitalization of the larger cap stocks, especially when you get over a billion plus, even though they may not have substantial amount of volume, there are enough market makers around those and types of firms. If you have an order, you can get them filled. And the liquidity is not always just on what you see on daily activity. That's part of the liquidity picture, but it's not the total liquidity picture. And when you start to get into deep fundamental analysis and looking at, volume, outstanding shares, all that stuff, there is a market maker that will fill just about any order. So even though it's somewhat small, unless you're trading very large, and we've had in all of the 20 some odd years of history, I've only known of one stock that I think that we had an influence on. I never can remember it. If old associate Mitch was here, he'd know it because he had to deal with a lot of the calls. But we had a sell come out on a symbol, and we had a substantial amount of people. It was a portfolio that I had promoted back in coming out of the 2009, 2010 strategy we had, and we sold out a symbol, and it got clobbered pretty good on the open. The good news was it was the company had the symbol had failed, the trends had failed, and once we sold it, it was the beginning of the sell-off. So had you not done that, it would have cost even more money. So it looked like a disaster, but we did. I'm pretty sure we were the big market makers that morning. We had substantial. I think we figured out we had something like over in excess of about $2 billion worth of shares, and most of them were executed on the open. So when you get that big, you can actually move the markets. For the most part, on smaller retail accounts, 100,000 to a million, you're not going to experience that type of activity, and it's not. And most of these symbols aren't concentrated like that at that particular time. A lot of folks had moved into that strategy. So liquidity is an interesting concept. It's just not daily volume. It's also looking at capitalization. And if you dig deep and you're an institutional trader, or you're looking at these things, how many institutions do trade these stocks, there's another level of liquidity that you can look at that is going to really help you to understand what you're dealing with as far as getting executions done and those type of things. So I don't see, even if it was a 20 or 30,000 share trading stock, and especially depending on the price of the stock as well, when you start to look at dollars being moved, all these things are factors. So I haven't ever had this conversation about this liquidity thing, but liquidity has multi levels of understanding what liquidity really is when it comes to execution of orders. And after that event that I talked about many years ago, I believe it was 2010 when that happened, we actually started to look at concentrations of positions and those type of things to make sure we kind of all knew what was going on, and we never had another issue other than that one stock. And it was that particular stock was fairly thin, but we came in with such big orders, it did affect the market. It's the only time in 22, almost 23 years I've seen that happen. So that's just reference.
Wanted to add to that as well, that the site in particular, it traded 100,000 shares on average. Yeah, it was 100,000. Like today, it actually did trade 25,000 only, but we are not basing of the current day numbers. We basically use the volume average over 365 days, and over 365 days, it was over 100,000 shares.
And that's another metric to keep in mind, folks, is the way there's a couple ways also. You can look at daily liquidity, or you can look at in this case it was annual average liquidity per day, so that it was 100,000 on average. And you're going to have these, more some days more and other days. What's that symbol? C what?
CYD.
So yeah, let's just go ahead and go through SIBE. You can see here 25,817 right now, and it is a $26 stock. So you can move around. Right now, this thing is. Let me just look and see what we're looking at as far as it's a weekly 1-2. Let's see what I have on here. That's perfect. This is weekly 1-2 that's on here right now. And what this is a neutral pattern, but we're trading right above the 200-week moving average. There's a lot of good stuff here. And, some of these, like I kind of stuck in a loop a little bit, but some of these things that we're looking at, that remember, this money hasn't been spent. It hasn't been approved by Congress yet. It hasn't been anything. So this is stuff that we're trying to get ahead of it, look for symbols that are going in there. And one of the things that I talk a lot about, you just want to get these symbols in a database, in a portfolio, so when they do rotate in, you can get them in. And if you do all the homework, which has already been done on these symbols that we're talking about here, and understanding the attributes, the ERs, what their returns are, their risk levels, all of that stuff, these are things that when you're utilizing the WaveTech or the Portfolio Expert platform, those are things that all of these metrics are right at your fingertips. So it's easy to find these things out. They're right there. And there's an effort going on to try to get some of these other new metrics into a dashboard or something that we can all see very easily, especially on the index level. I think we'll probably do a recorded version and talk about some of the metrics and things to look at on the. I talk about them every night actually, but the win-loss, not the win-loss, but the buy-sell ratios on the database, all kinds of stuff that I talk about. These are very significant things in understanding what's going on within the trends on the larger scale of the markets, and getting into the weeds and really starting to figure out which symbols are going to play. And then when you start to break down into these industry groups like we're digging through today, these are really interesting facts to look at. And like I said, we are going to put some things. Somebody's pointing out the markets are reversing a bit here, so we're definitely seeing. I think what we'll do is we'll spend a few more minutes doing this. We're coming in about 15 minutes to close. We haven't done a lot on the markets for about an hour and a half, and we'll probably go back. But this is something that I want to you folks to be part of, and I think it will. This is like the first time we've brought this into everyone, and so we kind of randomly, Michael and I spent, like I said, all last weekend together, physically together, and I talked about it, saying I want to start getting this out to the community, start to see the kind of in-depth thought that's going on in the community. It's not just a bunch of trolls talking about R1, S1, and whatever. It's about really managing money, really doing some serious things. There's a lot of real money going in and around the products, both on our institutional accounts, clients, as well as the retail folks. So these are things that you need to understand from, I guess, from a community level. And we're trying to find a way to start to bring some of this thought out there, and then also looking for folks that can be part of this effort in building this kind of elite community out, is that this is really where it's at. And you guys know I used to do this is my 41 years of experience. I stopped doing that on the nightly videos. You guys know it. You can look at me. I'm old, right? I'll be 69 this year, and I've been doing this stuff for a very long time. And what's exciting about everything that we do around here is that we're bringing in like a new perspective on looking at the markets through the WaveTech database, through the analysis, the PPMs, all this stuff. You know, like I told you guys, we've been hanging out. This is what, April, about a year actually. That this channel really went up and started to do some stuff. So yeah, so John C is saying SIBE and or open and PX portfolio, open monthly. Yeah, probably ACOS daily 1, 2, weekly 2, monthly 2. Yeah, so yeah, so you know, it's guys like Jake that are a problem around here. He's now listen, I really enjoy it. Jake and I talk a lot. He's one of our good friends, we'll say. We'll keep it nice and clean. So anyway, but yeah, so just know that's what we're doing here. I know today's show was a lot different. I'm going to go and tune into the markets here. We'll go through the close together, but hopefully, you know, you start to see the benefit. This is something we're going to do maybe once a month and start to really dig into this stuff. I'm going to find a way to get it compacted down to maybe like a monthly, you know, 15-minute, 30-minute, trying to get some sections down. I've got a lot of thoughts going on how we can get this kind of information out to you folks, and it's very usable. And the goal is, this is the stuff that we talked about today is just on, you know, on semiconductors. Well, in the future, it's going to be other industry groups, and we're just going to go through the spectrum. All if they're going to rebuild America, there's a lot of things going on, and I have some concepts that I think are going to be going on as far as the markets, and where there's some real huge infrastructure builds going on. It's going to be interesting to just watch the world unfold from here, and just see how, I guess, not only infrastructure but other elements of the economy as we continue to come back and, you know, get things, whatever normal is or the new normal or whatever it is we're dealing with. So yeah, no, I listen. This whole channel, you guys know this. I'm just kind of back on screen here, and this whole channel is about, you know, doing what we're talking about here. You know, figuring out how to make some serious money, how to go. One of my lines I talk about a lot is I want to go from take you folks from speculating and drawing trend lines on a piece of paper or on a chart on trend view, and start to really bring in some deeper analysis, portfolio construction, risk control, all of that kind of stuff. You know, that's really important, and these are things that upper end managers have access to. So that's what this community is all about. Yeah, and you may remain. I see somebody just mentioned that GME is on a run again. I actually put out alert 2 weeks ago that if you're a WaveTech user, you probably should put GME in your strategy, because these guys, that company is very alive. You know, all of a sudden it went from basically 0 to 12 billion. So there's a lot there. But anyway, just let's go and take the last few minutes here and dig into the stuff. I want to thank Michael for coming on and spending his time today. And thanks a lot, Michael, for coming on today.
Yeah, I'm here. I'm here. I just put my sound off. Yeah, no problem. I was happy to participate.
This was the first.
It was useful for everyone, and if you have any questions, just basically email to Jay or Bob, and we'll respond. And if you want to participate in this effort, also let us know.
Yeah, so that's one of the things that I want to point out is that if you want to find out more about this, we're going to put some things together that you'll be able to actually, participate. Right now, there's info at Kendall Report if you want. That mailbox gets a little cluttered with a lot of stuff, and I actually told everybody I was going to put another email together. So I'm going to put an email together by the end of today, so that we'll give you. I'll mention it on the nightly videos, and if you're on our mailing list, we're going to send some things out. Like I said before, we don't send a lot of stuff out, but we want to start building this community up. So let's go ahead. We got about 9 minutes to go in the markets, and let's go ahead and take a look and see how these things are looking as we come in at the end. So we see the S&P down 15 handles. So we did manage to print into a moderate new high, and we're finally seeing some selling come in for the first time. We printed down to a low of 13. I want to go over to this page here and just take a quick look at the grid numbers today, and let's get to a daily chart. And we printed to, so expectation was S1 R2. We got up just about to the R2 49. We came just short of that, and then S1 was 24. We actually went exactly to S2, so we had an R2 S2 range today. So there's certainly, I'm sure if we brought up a 5-minute chart or some incremental chart here, there was probably some pretty decent places to maybe get short and play this range today. This is a 5-minute E-mini chart right now. But yeah, so this range definitely expanded. The fact that look like we're trying to get maybe to a trade down into the lower end of the range, maybe we'll set the tone for further sideways. It looked like after yesterday that we got the RTX sell on Friday. We went sideways. We traded up the upper end of the range. Now we reversed down to the bottom end of the range, and we'll see how this thing sets up. PPM 1 has crossed its first derivative. PPM 2 has done the same. So we're starting to see the potential for maybe this thing stalling out here again, maybe for a few days. And as I've talked a lot about over the last couple days, is that just come back on screen for a minute, is that tomorrow is the big day, okay? And I'll cover this in tonight's video, but we've got some major news coming out, not just claims and continuing claims, but there is a ton. I think I don't have the list in front of me, but they're big. I'll cover that in tonight's video. But these are likely to be pretty impactful. Maybe there's a little leak going on. Yeah, remember all the leaks, just about anything that went through the White House back in the, between 2016 and 2020, if you remember that period, everything was leaked. It was like a leaking sieve. It was like, and now it's so tight you can't find out even what's going on at all. So it's very interesting. So there's definitely was a bias going on in the government and things going on. There was a lot of anti, So I'll just say that, right now that place is tight. You can't find out anything. So anyway, it'll be interesting to see. But maybe we're seeing some selling into the close here as we're coming in. We're 5 minutes, so we're printing down to the lows of the session. I'm going to go back over to the charts here, and so we can see that. We just printed almost down to the low. We're bouncing a little bit. We printed 13 1/4 here just a second ago. So we're seeing that the we're seeing a little bit of a bounce here. We've got about 4.5 minutes to go. And you folks know this is my favorite time of the day. So since we did all this stuff, if you've hung out and Yeah, yeah, and maybe we'll do a couple stocks. You guys can give me a couple stocks. Don't give them to me right now. That'll fill up the line, and I won't be able to see everything. But yeah, so that's the thing about GME, and this is something. If you go back, probably watch some live streams if you could find it buried in 3 hours. If you go back to that, you'll remember that I said that GME got a new life. They went from being broke to having $12 billion in the bank. Now they've refinanced their debt. They did a secondary offering. They're bringing in money. I don't know what they're going to do as far as with the company, whether it's going to be online gaming. Who knows what they're going to do? They got plenty of money to do virtually everything that they want to do. So just know that's the case. But yeah, so we're still just kind of hanging around in this lower end of the range for the day, almost down 0.5% as it turns out. So markets followed through to a point, and this is probably this 41.50 level is going to end up to be maybe set the tone for some choppiness. And I'll, like I said, tonight's video will cover all that. Last night's video was pretty short. Yeah. So let's see here. Yeah, appreciate. Yeah, we're gonna get everything organized. This was, I see Michael thanking everyone. It's really good stuff. We've got, man, we spent an intense 3 days. He's a much younger man than I am. We were both burned out at the end. I'm not sure who was tired on Sunday night, but we really got through a lot of details, a lot of things that I think are going to be big for the community. So just looking at this chart coming in, we're really just starting to set up, the final. We're in the final 2 minutes, so we got about a minute to go. It'll be interesting to see if we get some liquidation, and I think maybe some of this is being protection being taken against all of these reports that are coming out tomorrow. So we'll see how it all plays out for sure. Yeah, we could see the VIX click in a little bit. We'll see. But there's still, when I went through the indexes earlier on, you're really looking at some substantial underlying trends on the intermediate level. I've talked about this a lot, is that the intermediate trends are driving everything, and they'll continue to drive this. And that's why I went through the trajectory of what's going on the daily and the monthly charts, because those are the big picture to keep an eyeball on. As far as the short-term dailies, there's not a lot there. So time for some Runa. Yeah, so final minute. We're still holding the lows right now. We'll see if we get any selling. I think it's interesting that they reverse this market. So we've had like I said, when we were looking at the grid, we're basically had an R2 S2 range today, and that's actually, we're getting some buying coming in here. So we're just printing 20. You see this coming in. This is the final minute. That's it. That's the bell. So we saw some little short covering coming in. We'll see how that. We'll hang out and do this. And let me get a pen and paper together, and I will. Usually have plenty of paper here, so. I'll put you on full screen. Let me get some paper and we'll do a couple things. We'll call it quits. Yeah, somewhat interesting. We did get some pretty decent short covering. I don't think by any means this is probably the top of this market, but that's why I do daily market commentary for our community, for our software users, and everything like that. Yeah, Pedro, I agree with you on that. Pedro is saying that for some reason I associate hyped IPO day with red market. Yeah, I and a lot of times the money will flow there, right? So it doesn't flow to other places. If let's take a look at coin here, and so let's do this. I see good old Tesla. I'll do Tesla, Apple, because that's always what we do. And give me, I'll do about 6 symbols. So give me some stuff. Yeah, the silver jig is telling you about theta. So wish I could do a show on theta. Anyway, yeah, so we'll do. Yeah, one of the things I'm going to bring up lumber too, real quick. So I'm going to do, yeah, we'll do GME and yeah. Okay, so, all right, so we've got, yeah, I could end up doing another hour here. So thanks for hanging out, everyone. PLTR. Yeah, okay. I'll pick a few of these stocks and we'll go through these and we'll go from there. So all right, let's go to work. And we'll finish up our day here. Okay. Okay, so we're going to go with, we'll start with Tesla. So I've left some trading systems up here. I've left some other things that we can take a look at. And what I want to, we're going to take a look at the viewpoint of Tesla got a daily RTX sell signal yesterday. Okay, so if you're on market grid, Tesla's on the market grid. If you are a subscriber, you knew this. So you got to. So we're looking at a couple days down, just off of the daily RTX sell signal that came in. PPMs are still very positive. PPM 1 is at a 1.41, and this is a daily chart. So that suggests around 705 is going to be substantial support, and that this is actually tomorrow's market grid already on the screen. Let me bring that up so you can see this. This is the grid for tomorrow. So I would look for this 710 S2. S2 should be substantial support in there. Extreme S3 on the downside. we look at this. If we go to the weekly, you see we spiked over the weekly high-end range. There's still a crisscross going, the 10 cross the 21. So this is going to set up most likely a consolidation pattern in the intermediate for Tesla, which also, since it's one of the top weighted stocks in the S&P, that's significant as well. But we do have some upward longer term Fibonacci numbers being suggested around a target of 1060, 1200 down the road. This is a ways away. There's going to be probably 4, 6, 8 weeks of work to be done setting up a pattern here. PPMs are very negative, so this is going to keep some pressure with PPM. This is a classic cross situation where we have PPM 1 is down 1.71, PPM 2 is up 1.65. This is where the cross goes, and what typically happens here is you get a consolidation out of this. And we set up a pattern probably, up toward this upper end of 800. I'm getting deeper into Tesla than I wanted to, but this monthly grid is pretty much what's driving it. R2 7, let's see here. R3 was 727. I'm sorry, 827. 772 was R2. The high 780. So on the downside, 618. That's a little lower. I think we're going to be able to get on a monthly basis. I suspect you got to go to the weekly chart, and the numbers I just mentioned, low 700s, are going to be your number there. Let's. I want to switch over from that, and we're just going to go to. We're going to go to lumber. It's a really weird market grid. I don't know what's going on there. Hang on a second. There we go. So lumber, I still have models up here. Actually got a lumber buy signal at 713. It's currently 890. We're seeing this thing print up. These objectives up here are substantial. What this tells you is that this lumber run is far from over. This is a daily chart. If we go over to weekly, what you're going to see here is this thing is printing into some of these objectives that we talked about, and they're it's really weird. There's some weird stuff on this on market grid on this weekly chart. It's really strange looking. Anyway, there's some kind of weird values that are coming out. Anyway, the target range on the upside was 1031 is extreme. We are just about printing target 2 at 918. The high so far 890. So we're coming up into this extreme range, but the last weekly buy signal on lumber was at 125. So this thing has been long lumber from 125, and there's no signs of an exit. And I talk about these PPMs. We got crazy PPM numbers here from the standpoint of plus 0.59, 0.72, all of that. So let's go ahead and I'm going to take a look at Apple. Has a little bit different. This is weekly. Apple got a weekly RTX sell signal. This, please be careful when I call it a sell signal. What it means, it signals a sideways into the grid. Typically, we'll get a S on a weekly basis. We'll get a S1, S2. So far, S1 has been exceeded by a little bit. So S2, 129.56 is going to be very strong support. You'll notice there's some Fibonacci numbers up here that are being projected. High target 153, 168 range on the upside. And that looks to be very valid. And I still think this is setting up the pattern that is going to move much higher as we go forward. Let's take a look at GME. I'm going to go to a daily chart so we get a little more focus here. What I'm looking for right now is that right now GME, and I brought this up I think last week, that there is I brought this up last week. There's a projections for GME to go to 426, extreme 545. You know, this stock is so much into play now, like we were discussing a little bit ago. They're now, you know, a 12 plus billion dollar company. And that's just a huge number. They have every opportunity. They went from, I think it was like 250 million to 12 billion in this spike and all the short squeeze. But what's happened, and this is important, what's happened is they were able to take that valuation, and now they're refining. I talked about this going way back when we were in the spike in the very first move, that this is significant to this company because they're now have the ability to do anything they want. GME could go out of the gaming business and go into something else. They can do whatever they want. So they can morph their business model. There's some big hedge fund money in there. I think Steve Cohen's in there in his fund, and they're influencing. They got rid of the old CFO, got a new CFO. They did a secondary offering. They refinanced. These guys are getting ready for game time, pun intended. So this is something that this stock is definitely going. We got an RXT sell, so we're looking for a little sideways. But I'm still looking right now. This has got a model in here. There's no buy signal in here right now, but the next buy signal out of WaveTech, I think you got to play it. I don't, not in a big way, but you need to play it because that's going to be significant, especially if these targets come into play. We're looking at 166 to, 400 plus. So we'll see what plays out here. So let's do. I see some HD a couple times. HD, Home Depot, last buy that our models had was at 267 back in this is a daily, this is on 312. So on a month ago, we got a buy at 267. And so we're climbing up. You can see this, if those of you have been around, I always tell about the old floor days. A buddy of mine used to do this with his fingers. If you look at the 3 moving averages, they're spread out, and that means we're in trend mode. And you look at the PPMs, 0.48, 0.66, 0.39. These are things that are definitely going to extend out. We may get into some correction phase on HD. Let's take a look at the weekly. And that was something that happened last year. Around July of last year, we started to see our intermediate models buying with both hands. And that's when November, around September, October, I was telling you folks that if you are WaveTech users, that you want to flip over to the intermediate models because that's the next play. I know somebody that's on the line or was there actually did that, and that's where you wanted to play because that was going to capture the next big trends, and you needed to be able to get through the daily noise. So you can see here, that's exactly what's on HD. This thing came in back in, also came in on a weekly buy around the same time. So this little breakout before it went to new highs was part of that. And the PPMs are big numbers, 1.45, 0.88, and 0.63, and those are really big. So this trend's not going away. As far as objectives, there's no Fibonacci objectives. It would look like maybe a consolidation up here within the grid. I'll bring the grid up so you can see that number if you're following this. You can write these numbers down, but this is the grid here is the range 306 to 331, and you can see so far we've had a 322 high, which is an R1, the low 317, which is S1. So S1, R1 on a weekly basis right now, and I suspect we'll stay within this range. I know that's a broad range there. It's almost a 10% band, but probably stay within a S2, R2 range as we come in to next week. And these numbers aren't going to change much from what they currently are. So that's good to know. So there's still going to be 325, 312 range is going to be the basic range, maybe a 309 print. Okay. Let's do two more. So here is skills, I guess. Pretty bad looking chart. This is a classic, looks like IPO ramp up to back to zero. And I'm gonna finish with PLTR actually. And so anyway, let's go to a daily chart, see if there's anything here that's looking. Yeah, it's trading below its 200-day moving average. Tough stock. PPMs are negative. Not a lot of promising. The only thing you can hope for is that it holds. Right now, the downward projection is 1434. It went to 1544. So that's the extremes are 1434. Below that would be 11. That would put you back when this thing started. It looks like that would be full circle. A lot of these IPOs that come out, especially some of the, everybody had to have Peloton and all of these different stocks. These things are likely to do not all of them, but many of them will do what I call a round turn. Here's where they came out. They'll go back and maybe even trade negative from the IPO offering. So. Yeah, I know I've talked a lot about this PLTR. Every time it looks like it wants to run, it rolls back over again. Still trading 23. It traded up to the 2620 handle. Still it got an RTX sell 2 days yesterday. So we're down today. And this is the grid. I'll put it up there. So if you ask for PLTR, this is the grid for tomorrow on the screen here. So looks like maybe an S1, S2, 2254. Still the magic number is 2250. We haven't gotten under that. If we get under 2250, that's going to be the end of the party for the stock. I still think there's potential for a 15 handle, maybe lower. And this is exactly one of these. I know this company's been around, but since it's come back in and public, we could see it come back into the original offering around $11, $14, I think. I just don't see it on the downside right now. There just seems to be a lot of resistance overhead. As we look at just real quick the weekly, there was a dragon head here. It went through. Now we're into this pattern here is likely the best case for Peloton for PLTR for Planter is to stay within the grid, which would be high range 2690, which it printed R3 2625 is pretty close to that range right now. Let's put that up there. Yeah, so 2620, 2625 was R3, and then the lower end 2259, 2273 has been the low so far this week. But like I said, for me, the magic number close solidly under 2250 is going to roll this stock over. There's not a lot of upside on it. There's not enough data right now to even generate the PPMs on this. Let me just see if I can see if I can bring something up over here real quick on our platform, just to see if I can get that out. Okay, this is weekly, so I can bring up what the PPMs look like on our platform. We still hold a weekly position. It came in the second week after the offering, so we'll see how this plays out. But the PPMs are actually still positive a little bit here. I don't know if I can get this to, yeah, I can't get it. There we go. This will help me a little bit to squish this chart a little bit. You can see down at the bottom here that the PPMs are all very negative. This is our weekly PPMs. TradeStation can't run this stuff like we can, but this is what it looks like. So that 40-day moving average, going back over to TradeStation, that 40-week moving average is going to be the key to this market. And right now you can't even generate one. There's not enough weeks to generate a 40-week moving average. So that will do it. So thanks everyone for coming to the show today. I really appreciate it. I know it was a little trying to get on track when Michael was on. I think was a little rough at first because we hadn't really done that type of meeting before. So I think it was pretty good overall. So I feel good about what happened there as far as so yeah, I just want to fix something real quick here. Okay, folks, this will be it. We still have about 265 hanging around, so that's good. So anyway, hope you enjoyed the my new view for you, so you can come in and see a little bit more of the office. So okay, folks, thanks again for coming. I appreciate it. And you know, people used to think this was a green screen. It actually is not. So there are actually real books on this thing. Anyway, folks, thanks for coming. I really appreciate it. We'll talk to you next Wednesday. And actually, you'll see me tonight when I do the video for tonight. So have a great afternoon. Thanks for hanging out. Really appreciate it. Don't forget to like and share any of the videos on the channel. So thanks again.